So I have a couple stocks that I think, in my opinion, might be good stocks to actually sell calls on and could be a good starter if you're looking for a stock to sell calls on. Hello my friends, this is Legend. So today we're going to change it up a little bit. I found a couple stocks that I think will be pretty good stocks for me to buy into, buy some shares, and sell calls against. And I want to show you why I would select these, what criteria I'm looking for when I'm looking for these stocks, and some of the indicators that I'm looking at for it to meet before I select those stocks to sell options on. So if you like this type of content, please hit that like button as it would be much appreciated. So I've got three stocks right here. I've got Broadcom, Shopify, and TJX. And as you can see, AVGO is about $300. Shopify is about $137, and TJX is about $153. In my sheet here, it does pull in what that RSI2 is so that you know if it's under 10 or not. It also shows if it's currently above that MA200. Now, it's not telling you that it's been up above that MA200 for the period of time, but it is showing that currently it is above that MA200. As this price here is that current position of the 200-day moving average. And that's why it's green, because at the current price, for example, on Broadcom, that MA200 is sitting at 302. And since the price is 319, it is above it, so therefore it is green. And the same goes for all three of these. And it also is pulling in that 1 year chart, and it's showing if it is currently up on that 1 year chart and the 5 year chart. So I'm looking for that as well. And then it's pulling in that stock line right here. It's another visual to show that it is green as it is moving up over that period of time. And of course, has the stock increased over the past year? And as you can see, Broadcom, it's up 33% over the year. Shopify 30% and TJX about 25%. And then I am also calculating what percentage it's sitting below that Bollinger Band midpoint. And as you can see right here, that is 107% below that midpoint, meaning that it's below the bottom of the Bollinger Band. Because 100% would be at the bottom, but that midpoint being 0. Okay, so as you can see, 89%, that would mean that it's pretty close to that bottom, and 67, it's about 2/3 of the way before hitting the very bottom of that Bollinger Band. And that's at that current day. And to show you what I mean, we can look at the chart here on AVGO, Shopify, and TJX. Here's AVGO. And you can see we are underneath that Bollinger Band, so that's why it was reading 107%. Shopify, it was about 80%, right? So it shows that Bollinger Band bottom being about 137.16 and the price being 137.89. So it's right there at it. And that was about 89%, okay? And then the last one, TJX, is showing about 67%. And there you go. There's TJX. And you can see that it closed about roughly 2/3 of the way under that midpoint of the Bollinger Band. So it's to help kind of quickly see if it's going to meet the criteria or not. But once I do have my symbols there, then I can use those, punch those into the stock chart, and actually really evaluate those to see if they have been staying above that MA200 for the period of time, and that's that 1 year and 5 year chart, as this only shows me at the moment. From a year ago, it is up above that price. But has it been above it for the entire time? You have to look at the chart for that. And that's when I go to the chart and I punch them in, and I go to my moving average right here. And I look at the 1 year chart on AVGO, and you can see there's the red line. and those candles are staying above it for the majority of the time. And the 5-year chart staying above it for the majority of the time. So AVGO looks like it's a possibility of one that I would look into getting into. How about TJX? Well, TJX, there it is. There's that red line, and that's the 200-day moving average. It's staying right above it. And the 5-year, there's that 200 MA, and those candles are staying above it as well. So TJX meets both those 1-year and 5-year MA 200 criteria. So both of those seem to be possibilities of ones that I would actually look to get into. How about Shopify? And here we are on Shopify. And there's that 200 moving average right there. And those candles are basically staying above it. It's not doing too bad, right? It did have a little dip back here. But again, that was around that April and March area of 2025. So there was a bit of a pullback during that time. So if you're overlooking that, then you can see that it is staying above that MA 200 at the current moment. And how about the 5-year? And this is the 5-year for Shopify. Now this is a bit of a worrisome, right? Was doing fine, and then we dipped down below it. And how long did we stay below it? Well, it looks like from February of 2022 all the way to almost the end of 2024 before it actually came above that MA 200. So for Shopify, it did not meet that 5-year criteria. And the reason I picked that 1-year and 5-year, and I want those candles to stay above it, is because if I do get stuck with those shares, I want the best possibility that this stock is going to continue to move up and not do something like this, drop down below to where I don't know what's going to happen at this point, right? Now, granted, it did come back and recover, but it took 3 years before actually getting back up to where it was at. That's why I want these candles to stay above that MA 200. So Shopify does not meet that criteria. So that's why, even though whenever I enter in my stock ticker symbols into this lookup chart, it does meet the criteria on here. But when you dive in and you get a little deeper, you find out Shopify does not meet that criteria of those candles staying above that 5-year 200 MA. So therefore, I'm just going to drop off Shopify. And we're left with AVGO and TJX. So on AVGO, I've got my Bollinger Band on. We already know it's under that Bollinger Band because it was sitting at about 107% on my table. And we know that that RSI 2 is below 10 because it was showing that on my table as well. So we already know it meets both those criteria. We just needed to see if it's actually staying above that MA 200. So for AVGO, it is looking like the right time to buy for me. Now, of course, none of this is financial advice, and you should do your own research. And don't just follow someone on YouTube. You need to understand why you're buying. And of course, always know when is your exit point before you even get in. So as you can see right here for AVGO, if I bought at this point, I would be looking for this to move back up, and then I would be looking to ride that MA5 as I'm looking for this one to pop back up, maybe test this MA 200 and then bounce off of that. But of course, that is not guaranteed, but that's the way I would be playing AVGO. And say I bought 100 shares at this point, then I would just be looking to sell that call at any point above my buy price. So selling that covered call is one of the easiest options that you can do. It's really no different than buying and selling a stock because you have to have 100 shares to sell a call. And all you're doing when you sell a call is you're agreeing to sell your shares at a certain price. And that's all it is. And you do that whenever you hit that sell button on a stock that you do own. The only difference is you get to pick what you want to sell it at instead of hitting that sell button and it sells at what that market price is. And then on top of that, you earn premium. So a nice little addition when you're selling calls. And on the second one here, we'll take a look at TJ Max. And as you can see here on TJX, we are down close to the bottom of that Bollinger Band. We are under 10 on that RSI 2. So again, if I were to buy 100 shares of TJX, then I can look to sell a call. Honestly, buying 100 shares and selling a call against it is the easiest option you can do. And it should be the first things that you start off on. Don't worry about selling a put. Just buy the 100 shares of a stock, and that's of a good stock, and then sell a call. And don't think that you can buy 100 shares of a $5 or a $10 stock and get the same results as you could of some of these other big boys. You might get lucky, but if that chart is not meeting that criteria of those candles staying above that MA200 on the 1 year and 5 year chart, then you are diminishing your chances of that stock increasing over time. Now that, again, none of it is guaranteed. You could have a stock that's moving up and to the right for 5 years straight and then all of a sudden drop. Nothing's guaranteed. But the history is all we have, and that's what we use. And if we buy down on that dip and then we sell our calls above that point, then we can earn that price appreciation on top of a premium for that stock. So for instance, on AVGO, if we were to look at the option chain on AVGO, and if we looked at a monthly, okay, and we'll do the third Friday of the month. So we're going to select February the 20th, and we're going to say that we bought those shares at roughly $320, okay? Because that is the current closing price of AVGO. And we're just going to say we bought them at $320. So how much could we make and what would we sell our call at? Well, if you bought them at $320, you can sell them for anything above $320 and make money. You just do not want to sell a call at $310. Because if you sell it at $310, then you're agreeing to sell your shares at $310, but you paid $320 and you're going to lose $10 a share, and you don't want to do that. So you always want to sell your call above your purchase price. And for AVGO, you can see you can do a monthly and you can pick any of these strikes right here, and that would definitely give you price appreciation. And you would earn a very nice premium. So say you select a 330 and that's 1 month out. That's $10 move up. So if this thing closes above 330 by February the 20th, then your shares would be taken away. You would make $10 per share. And if you had one contract, that's 100 shares. So that would be $1,000 in your pocket for the month. And how much do you make in premium just for doing that? Well, right here is showing about the mid price. And that's about $11.68. That's per share times 100. So that would be $1,168 that you would earn just for selling that call. Now, of course, you don't want to buy shares of a stock that you do not want to own. So if you do not like AVGO, or you do not believe in AVGO or Broadcom, right? Then you should not get into it. But for me, if I were to get into this and I sold a 330 for a month out, I would make about $1,100 in premium, and I would make another $1,000 in price appreciation if it did get called away. Now, of course, those 100 shares at $320, that's $32,000. So this definitely is not for someone with a $5,000 account, right? You do have to have some money in your account, but like I said, don't think that you can get a $5 stock and it should do the same thing, right? Because if you are trading a stock that is crappy, then your results are very possibly also going to be crappy. So it is not a one for one. You have to have a good stock that you're getting into. And I'm not saying AVGO is a good stock. I'm saying that it meets my criteria, so I consider it as a possible stock that I would use in this situation. So like I said, we would make about $1,100. So that's $1,168 plus that price appreciation is $1,000. Okay. And that's how much we would make right there in 1 month. $2,100. That's a little over 21, right? But how much did we have invested? Well, we had about $32,000 invested. And if we take that and we divide that by $32,000, let's see what that percentage is on our money. And that percentage would be 0.06 times 100 to get to that percent. And that's a 6.7% per month on your money. And that is, of course, those shares getting taken away. Now, if those shares are not taken away, then you would not get that $10 price appreciation. You're only going to earn that $1,168 if that stock does not close up above 330. Then you would still keep your shares, but you still earn $1,168. So that $1,168 divided by that same $32,000 that you have invested, because you do own those shares at $320 per share. Now you're looking at a 0.03 times 100. So you're looking at 3.6% on your money in a month. Now, I don't know about you, but that is still good money. To get 3% or 4% in a month, wow. Now, keep in mind, you are buying those shares at $320. If that stock does drop, you still own those shares at $320, right? So you do have to be willing to own those shares at $320. And that's why you have to do your research, and you've got to believe in that stock, and you've got to like the stock. You've got to like where it's headed and going, because you are investing into that stock at a $320 per share price. But because of those charts, for me, that is what gives me a little bit more assurance that this stock here should be okay in the long term. And that's why I want to make sure this thing is going up and to the right over time, because what if I'm buying this at $320 and for some reason something comes out, Broadcom drops, right? And it drops all the way down to 220 bucks. Am I getting worried at 220 bucks? Well, I'll tell you, I'm not too happy with it, right? I'm not too happy, but I then look at the chart and I look back at my graph here. I look at that 1 year and I see that trend. And then I look at that 5 year and I see that trend. But do notice, there are times where it does drop, right? Just like right here in that 5 year chart, it did drop. I mean, it went from about 244 all the way down to about 136, okay? So it can drop, but because of the history of this one wanting to move up and to the right, it then recovered, and eventually you were back to being able to sell calls. Because if it does drop too hard, you will get to the point where you cannot sell a call against it. And that's understandable. And if you try to play dangerously by selling a call under your strike, say it dropped to $250, and you're going to try to sell a $300 strike just to get maybe some money coming in, do keep in mind, if it does get up above that 300 before that strike, you could get called away at 300 and you paid 320. So therefore you're going to lose 20 bucks a share. So be very careful if you do decide to sell a call that is under your purchase price. There are other ways that you can readjust this average price, as you could average in how much you're earning in premium, how much you've been getting in price appreciation, and that could help to average yourself down, right? So your average may not actually be 320. Your adjusted average could be down to 305, over time, or even less than that. So you could use a bit of that, especially if the stock is having a bad time and it's really low in price. You could use your adjusted average and sell calls above that. Keeping in mind, you could lose premium that you have earned over time by doing that. But for me, I would much rather just be patient and wait for that chart and those candles to turn back around and then make that trend true again. So over time, I'm going to do a little bit more on options, as I know there are a lot of people who are trying to learn options, and I'd like to do something a little bit more on the simple side, and that's just selling calls, as I really believe you need to learn selling calls first. I really think that's the first thing you need to learn, and then you can move to selling puts and selling calls, which you could then use the wheel strategy. But I don't think you want to start off with that. I really honestly think you need to start off using a good stock and buying 100 shares and then selling a call against that until you really fully understand the options, how they work, just learning to get in and out of them. And of course, rolling them if you need to, before moving into selling puts, and then eventually get into a little bit more of a fancier option to where you're buying leaps, bear call spreads, and such like that. But starting off with 100 shares and selling a call is a pretty good way to get your feet wet on a stock that you do like and you may already own. Because if you already own 100 shares of a stock, you can look to see, could you sell a call against it? So check the options chain and find out if you can. Why not earn a little bit of premium on a stock that might just be kind of sitting stale, not moving much? Just make sure that you sell that call above your cost, just so that if they are called away, you won't lose on that price. So I know that was a lot to go through, and I'm going to go through this a few times, but I just wanted to kind of start and get something out there, and I hope it was useful. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.